Good afternoon. It is our time again to discover something new related to tax and accounting. Today the topic is Trump Account, IRC 530A, and we are going to talk about everything related to this and to see how you are going to implement that in this year's tax filing. All right, what is Trump Account, right? Trump Account is a new tax favored investment account. So you can almost equip that with Roth IRA. We all know Roth IRA, right? You don't get tax deduction when you have Roth IRA when you contribute. But when you take it out, the earnings inside of the Roth IRA is not taxable, right? So you can sort of think Trump account is for Roth IRA. But remember, Roth IRA has an income limit. You have to be older, and it's not available to infant all the way to 18 years old. So this Trump account basically is offering a Roth IRA for a little kid. So in the midst of this concept, and the Trump account also throw out a thing called seed money. So it's called seed money because they want to give children who are born after December 31st, 2024. So if you were born on January the 1st, 2025, that kid is eligible for the seed money. The seed money is $1,000. This is the Trump seed money, and it give to your Trump account. But then, of course, going forward, you still contribute, right? As a parent, you will contribute to that account, and that account is one kid, one account. The kid cannot have multiple accounts. Then, what is the purpose of the Trump account? Basically, what the account will do is, let's say you have a 4 years old and you establish a Trump account. Then every year you put in $5,000 for the kid and it growing inside. When the kid grow to be 18 years old, you already have a lot of money inside of the Trump account, right? So with the investment and everything is growing. So at the age 18, it turned into Roth IRA account. So that is it's just a way of, a saving for your children. Other than 529, you can have Trump account. The statutory goal, like this is like by the book, what the Congress say, is to provide a long-term tax-favored saving vehicle for children and the eligible individuals, especially minors, enable them to save. The Treasury will make a initial 1,000 pilot seed contribution for your account. So once you open the account, the Treasury will give you that $1,000. So your balance will show as 1,000 if your kid was born between this time. So there's two things. Number one, you can have Trump account. Number two, if it is happened to be born during the second term of Trump's years, then it gets the $1,000 extra. The key feature and the structure, so who is eligible is individual must be under 18. So if you have a kid who is 17, you literally can set up the Trump account as well, put the $5,000 for the kid. But remember, because he was born way before Trump became president, so this kid who is 17 will not have that seed money. And you must have a social security number and be a U.S. citizen. And then your parents or guardians and other sources can make election to establish the account for the minor. And to get the seed money, then of course you have to be certain age. I wrote this December 31st, 2027 wrong. It is December 31st, 2028. So there is no income limitation, not like Roth IRA. If you go over $180,000, you lose that. You cannot contribute to Roth IRA. But now this one has no income limitation. But because you're under age 18, so you don't file taxes, right? So it is your guardians and your parents who set up that account, who apply that account for you with IRS. So that is how that is done. Then contribution, of course, is $5,000 per year we talked about, right? So employer may contribute up to $2,500 per year, but the total cannot be over $500. So if the employer of the parents contributed that, then the parents would have the leftover. So the type of contribution, just kind of look at this one, because contribution just means the money you put in the account, right? The parents, guardians, and other personal contributions. So that means your parents, guardian, other individual relatives can put in the contribution. The employer can put in the contribution under IRC code 128. So this is structured very much like the 401k plan, the cafeteria plan. There's more guidance need to come in, but right now at this point it's so new to the employer, so we haven't really had anyone implementing that. So, but 2026 is a year to do it. Qualified general contributions from charities, from government entities, those are qualified general contributions. But just know that these contributions, because they are not money you already paid taxes for, so their basis is different. So when you put those money into Trump account, you actually need to pay taxes. When you draw it out, the principal, like the 5,000, need to pay taxes. So the basis inside of Trump account can be two ways to calculate it. Of course, qualified rollover contribution from one Trump account to another for the benefit of the same beneficiary. So maybe you open up a two Trump account, but for the same individual, the $5,000 rule applies for each one. So you can combine them if you have two, but you do not go over that 5,000 per year and per kid. Contribution must be made by December 31st. This is very important because when folks are purchasing traditional IRA and Roth IRA, they can wait until April 15th of following year, right? So to contribute for 2025. But this Trump account is no, you cannot do it in 2026 for 2025. You have to do it by the end of December 31st of that year. Just remember. So those are kind of special nuances that you need to remember. But if you don't want to remember those, of course you work with professionals and they would remember that for you. So the growth and investment rules are also special. And during the period the money is in the account, it must be invested in qualifying mutual funds or ETFs that tracks qualified index like SP 500. No leveraging means you cannot borrow it out. And annual fees are less than 0.10% asset, just means that there's still fees for you. Custodian restricted investment manual means that you will be giving choices. You cannot do this self-directed IRA kind of thing. So there is a restriction for the investment. But the statutory purpose for the limitation is more wanting to see you investing it safely, so you for sure get a positive return in investment rather than maybe losing it because you're a risk taker, right? So distribution rules also, no distribution are allowed before age 18. You see, pretty set in stone. If the beneficiary, if the kid died before 18, then the account ceased to qualify as a Trump account. And the tax consequences is going to be just like Roth IRA, how that is going to be. If it is after 18, then a standard IRA distribution rules will apply. So basically, you can kind of envision that to be part of your IRA if distribution ever happens. What are the things you want to watch? Don't overcontribute, right? So there is a 6% taxes if you overcontribute on the overage amount. And don't try do a creative investment on that amount. It is not in the statutory guidance and is really meant for investing in the safe mutual fund. The basis tracking is also important because if you're getting contribution from the government or nonprofit organization, you don't have basis on that. So the whole thing is regarded as a gain. So those are the base differences, not different from the kids' parents are putting in the money. They already pay taxes, so that $5,000 from the parents are after tax amount. So when the kid took it out, the bases are not taxable, and the earning because of his Trump account, the statutory rules also says is not taxable. So the whole thing is free. But if you, let's say if you did a $5,000 from the government grant, then the $5,000 will be taxable. The gaining part is not taxable when you drew it out. So establish a account. It is not like you go to any bank goes, I want Trump account. They don't set it up for you. The Trump account is set up by Treasury Department. So when you submit Form 4547, so, the form numbers is all over the place. And if you want to remember that this is just Trump account application. So you don't have to remember the number, but Trump account application. So you fill out this form and you submitted that together with your 1040 tax return. So this year, this 2026, folks, is the time to do it. And I want to make sure that that's why we put this one here. And even if you want to finish your tax early, not to wait for anything else, you still want to finish 4547. That form is already there, and you need to make that election. If you know that you got a kid in 2025, you want that 1,000 seed money, right? So you fill up 4547, have Treasury open up the account. They will send you an email with a link. So that link allows you to activate that account. Then you will be able to put in, you got $1,000 from the government for seed money. But 2025, December 31st is already gone. You cannot put in 2025. 2026 though, you can put in your $5,000 before the December 31st, 2026. So the IRS Notice 2025-68, that provides the initial operational guidance, including the eligibility we already talked about, and the contribution categories, investment requirements, reporting obligations during the growth period. The tax treatment and reporting, tax benefit, no need to say you know that, because it is the growth inside of your kid account is tax-free. Right? But there's no tax benefit for you to put it in because you need to pay taxes first before the $5,000 to go in, right? Then, reporting requirement, that is not something you need to worry about. And on your individual taxes, you just need to make sure you are actually going to trigger that form 4547. Make sure you file that with your 1040. This is a quick summary of Trump account and, kind of synopsis of everything we talked about earlier. So personal tax efficiency. So this contribution is made after tax dollars. So the benefit is not really in the tax saving you have right now. You don't really get any deduction because of you create a Trump account, but the saving is really in the future. But the good news is, doesn't matter how much money you make, you can do that for your kids. It's not limited by the amount of money you make. And some of the folks cannot even contribute to IRA, Roth IRA, because they made too much money already. Their AGI is too high. But this particular one, no issues. And you know that no income limitation, and you should do it for the sake of the kid, right? Then the other consideration is related to estate and the wealth transfer. So folks with a lot of wealth and obviously thinking about how to transfer wealth to the children without subject to death tax, right? Estate tax. So that limit is a $50 million per parent, $30 million total if both are dying. If it is over $50 million or if it is couple over $30 million, then the kids will pay estate tax. So we also call that death tax. Then the last one is actually, the last planning consideration is actually a one that I am still exploring that for our client. And so we can talk about this. So small business owners, employer can offer contribution on behalf of the employee's children under this plan. Okay, so remember that threshold is $2,500. Properly structured employer contribution are not taxable compensation to the employee, and it can be deducted by the business. It's not taxable to the mom and dad, but can be deducted by mom and dad's business. So, for example, for S Corp shareholders, greater than 2% shareholders, partners, sole proprietors, those are people, right? The employer contribution may be treated as a taxable compensation, depends on entity type. So that contribution can go as taxable compensation, so it runs in your W-2, but company takes that over, deduct their taxes. Business owner may interact with Trump account in two distinct roles. One is parent, the other one is the employer contributing under eligible employer benefit structure. So those are the things we want to explore. And while we are doing it in the year of 2026, note that our absolute due date is actually December 31st, 2026 for the contribution of 2026. And look at my last little bit of the bullet point. So the personal contribution equals to after-tax gifts. But there is no gift tax requirement filing in this particular scenarios. Employer contributions equals to potentially excluded from employee income, but subject to plan design and non-discrimination rules. So this tells me that if the company decides to do that, it can get away from the employee's contribution. The company can deduct it as business expense if it is peanut butter approach to everybody. So it still needs development, but there is already such a framework is already out, so it's worth of exploring. The plan must comply with non-discrimination rules similar to other fringe benefit programs. If you want to get that for yourself as a business owner, you need to extend that to everybody who is eligible. So this is so much about Trump account today. I hope you got a hang of it, knowing that, okay, any of my kids who is under age 18, I can set it up. In our practice, and we will direct our team to include 4547 for all of our clients with dependent and making sure that they are okay to set that up. Why not? I mean, yeah, they don't get the seed money, but they will have the freedom to put in $5,000 for the kids for saving, right? So that is all good. All right. So this is our website, communitycpa.com. And you notice that we have this on board with us button. If you click that button, and you will sign up with us 24/7 whenever you have time through this button, then we will get back to you and get you connected with the right team member to help you out. So we have 6 partners, 2 managers listed on our website. 6 partners, we're all in different area of practice. So Dr. Howe and one of the partner, and he is legal compliance and the immigration side of work. And Dan Kim, another partner, he's in charge of client service of market development. Juan, specialty in payroll accounting, sales tax. Song, he is our attest partner, handles audit. And Derek is our IT network architecture and IT partner. Tiffany is our tax manager. Eileen is our accounting and audit manager. And this is YouTube channel. We always deposit all of our webinars into here. And I hope that you will subscribe to our channel so you always get notified what we have for you next. And also, if you like our video, give a thumb up. Last, no responsibility disclaimer. Of course, all our webinars are for educational purposes, and it is not the tax, legal, accounting advice, because those advice need to give to you customized. We need to know who you are before we can finalize what is the advice. And be sure to review any decision with your CPA, your attorney, your tax advisor, or with community CPA before you put that in action. All right, I'll talk to you again